Hey everyone, welcome back to Corporate Decoder. Today we have a filing from Oramed Pharmaceuticals Incorporated, and let's just say it involves some interesting moves with warrants and deferred payments. It's a bit of a financial chess match, so let's break it down before we dive into the nitty-gritty. If you love getting these clear, no jargon explanations of complex corporate filings, make sure you hit that subscribe button. And hey, join our Discord community too. You'll find the link in the description below. It's where we chat about these things and more. So what we're looking at here is a report filed on the 20th of February 2026 for events happening right around the 19th of February 2026. This is officially a Form 8K, which is like a company's bulletin board for signaling major events that shareholders need to know about right away. Think of it as a company saying, hey world, something important just happened. This form itself, Form 8K, is important because it tells us this isn't just a routine update. It is about a significant development. The company we're focusing on is Oramed Pharmaceuticals Incorporated. They are a biopharmaceutical company, and like many in this space, their financial activities can get a little intricate. A quick look at what is registered shows they have common stock, par value $0.012, traded under the symbol ORMP on the Nasdaq Capital Market and the Tel Aviv Stock Exchange. That gives you a sense of their public presence. Now, the main story in this filing is under Item 1.01, which is all about entering into a significant agreement, and this agreement involves Oramed Pharmaceuticals Incorporated and another company called Silex Holding Company. Here is the deal. Oramed Pharmaceuticals Incorporated had a right to get paid some money by Silex Holding Company on a specific date. This payment was part of a larger deal involving something called Tranche B notes. But instead of getting that payment right away, Oramed agreed to defer it. Why? Because Silex Holding Company decided to give Oramed a new warrant. Think of a warrant like an option. It gives Oramed the right, but not the obligation, to buy a certain number of Silex Holding Company's shares at a set price. In this case, it is warrants for 100,000 shares of Silex Holding Company's common stock, with the price to buy them set at $20 per share. There is a little bit of a twist here. The filing states the deferred payment was actually made to Oramed in November 2025, which is interesting because this report is from February of 2026. So they deferred it, got it later, and then issued a warrant. It seems they got the cash flow they needed, and Oramed got a potential future upside. This new warrant, called the February 2026 warrant, can be used right away. It's important to note that Silex Holding Company is using a specific exemption from having to register these warrants with the Securities and Exchange Commission, or SEC. This usually means they are selling to a limited number of sophisticated investors who understand the risks involved. Silex Holding Company has promised to make things official by filing a registration statement. Essentially, they're going to file paperwork with the SEC to officially register the shares that Oramed Pharmaceuticals Incorporated could get by using these warrants. This is usually done so that if Oramed decides to sell those shares on the open market, they can do so legally. They have a few deadlines to get this done, but they are aiming to have it sorted out pretty quickly, definitely by March of 2026 at the latest. The warrant itself has a ticking clock. It's set to expire on the 13th of December 2029. That means Oramed has until that date to decide if they want to exercise their right to buy those shares. The $20 exercise price isn't set in stone forever. It can change if Silex Holding Company does things like split its stock, issue more shares, or undergo other corporate changes. To raise a floor to this adjustment, meaning the price won't go lower than $8.22 per share, even with all these adjustments. This protects Silex Holding Company somewhat from massive dilution if the stock price drops significantly. Here is another important detail. If Silex Holding Company hasn't completed that registration we just talked about, and Oramed decides to use the warrant, they can do it without actually handing over cash for the shares. This is known as a cashless exercise. Basically, they can swap the value of the warrant for the shares directly. There is a limit on how many shares Oramed can actually acquire this way. They can't end up owning more than 4.99% of Silex Holding Company's total outstanding shares after exercising the warrant. They have the option to increase this limit up to 9.99%, but they have to give Silex Holding Company a heads up about 61 days in advance. This is a common clause to prevent a single investor from suddenly taking over a large chunk of a company through warrants and options. The warrant also has some protective clauses for Oramed regarding major corporate events. For instance, if Silex Holding Company undergoes a big merger or acquisition, what they call a fundamental transaction, the new company that takes over must formally agree to all the terms of this warrant before the deal is finalized. This ensures Oremed's rights are protected, even if the company structure changes dramatically. And if something like a major corporate change happens, Oramed gets to receive whatever they would have been entitled to if they had already exercised their warrant before that event occurred. Think of it as getting to share in the spoils of any big company shift. In situations involving a change of control, Oramed has another key right. They can force Silex Holding Company to buy back the remaining part of the warrant that hasn't been used yet, and the price Silex would pay is based on a specific financial model called the Black-Scholes value, which is a way to figure out the fair theoretical value of an option or warrant. Beyond these key points, the agreement also includes standard promises and assurances from both Oramed Pharmaceuticals Incorporated and Silex Holding Company, which are common in business contracts. The actual warrant agreement itself is filed as Exhibit 10.1, and the template for the February 2026 warrant is listed as Exhibit 10.2. These are the official documents backing up everything we've discussed. Finally, Item 9.01 is where they list all the exhibits attached to this report, including those important agreement documents and the IXBRL data for the cover page, which helps with digital filing formats. And we see Nadav Kidron, President and CEO of Oramed Pharmaceuticals Incorporated, signing off on this report on the 20th of February 2026. So, what is the takeaway here? Oramed Pharmaceuticals Incorporated is making strategic financial moves by deferring a cash payment. They secured a warrant with potential upside in Silex Holding Company. They've got a pathway to eventually hold more shares, with some safeguards in place to protect their investment and rights, even if Silex Holding Company undergoes major changes. It is a calculated play typical of companies in the volatile biopharmaceutical sector, aiming for future growth through strategic partnerships and financial instruments. The key for Oramed will be whether Silex Holding Company's stock price moves significantly enough to make exercising these warrants at $20. Per Esher, a profitable decision before their expiration in late 2029. This shows a company actively managing its capital and seeking opportunities beyond its immediate operational cash flow. Alright, that is our breakdown of Oramed Pharmaceuticals Incorporated's latest filing. What is your take on these warrant deals and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.